Today's highlights. Venezuela has been taken over by the United States, yet this hasn't shaken Bitcoin. After Maduro's arrest, the fate of the petro has become a mystery. What industry signals are hidden behind the three things that Future Assets has accomplished? It's Monday, January 5th. This is the BitcoinTV Chinese channel, Billion Hizai. I'm Michael. Let's first look at the most important data headlines from the past 24 hours in the crypto space. We've recently gained a lot of new viewers, so I want to let everyone know that this channel is dedicated to bringing you the key daily news about Web3. In just 3 to 5 minutes, our headlines will tell you everything that's happening in the crypto world in terms of sentiment, trading, and data. All right, let's take a look. Whenever there's a stir in geopolitics, the first thing to react is market sentiment. Can Bitcoin really hold up? We can't just focus on the price, so we need to look at the net flow on exchanges, exchange net flow, to determine whether there's any panic-driven withdrawal happening. What's even more crucial is to see whether money is actually flowing into the exchanges. So let's look back. From January 3rd to 5th, 2026, right after the news from Venezuela broke, Bitcoin had been consolidating around 96,000 for a while, then briefly dropped to 89,000. After the market gradually digested the news on January 4th, the price climbed back up to 91,000, and now it's simply continuing to rebound. It even reached a high of 93,300, so overall, it was first suppressed and then started to gradually move upward. The key point is that during this period, there was no sign of a continuous inflow of funds into the exchanges. What does this mean? It means the market did not treat the political risk as a systemic risk, and it also shows that more people chose to stay on the sidelines and watch rather than immediately take action. Alright, we also need to track another data point, which is where the stablecoins are flowing. If stablecoins are not continuously being transferred to exchanges for actual trading, then the recovery will just have to wait. So what is the current situation? Overall demand is still relatively weak. Neither Tether nor Circle's market cap has returned to an expansion phase. So, the market is slowly digesting the old money it already holds, rather than waiting for new funds to come in and provide momentum. But the good news is that recent data has started to shift. The amount of stablecoins flowing into exchanges is slowly recovering, which indicates that some funds are starting to return to the risk market, looking for opportunities and positioning themselves in advance. Although the overall volume isn't very large yet, the direction has already changed. Looking at the 7-day net inflow, it has rebounded from $51 billion to $81 billion. As for the 90-day average, it's still in a downward trend and is currently stuck at around $100 billion. Only if this latter figure can firmly stay above $100 billion without falling below, can it be considered a true signal of structural recovery. Before that, every rebound feels more like a tentative test rather than something you can confidently call a full recovery. Alright, the market has somewhat recovered and rebounded, and everyone is quite happy, but we still need to calmly analyze the situation. Let's take a look. After the surge in the RMB market in November 2024, its presence among altcoins has been steadily declining. By December 2025, it had dropped to a historic low, a level of extremity that was only seen once before, right before the last major RMB boom. This ratio essentially measures how much capital is concentrated in RMB and what proportion it holds within the entire altcoin market. In other words, it shows just how concentrated institutional funds are. From November 2024, this index was at a high of about 0.11, and it steadily compressed down to 0.032 by December 2025. The recent change is that this indicator has stopped declining, has stabilized, and even shown a slight rebound. At the same time, the prices of some major RMB-denominated coins have also shown relatively strong performance. This combination, where the proportion stops falling but prices start to move first, has historically tended to appear when sector rotation is almost complete. This is the stage where risk-tolerant capital begins to test the waters with risk assets. But let's be clear, we have not yet reached the point where a new confirmed major upward trend is starting. It's more like an early signal of a structural recovery. Alright, please like this video and turn on the notification bell. Let me emphasize again, the benefit of turning on the bell is that just by looking at the title, you'll know what's happening in the crypto world. That way, you'll always have enough material for bragging in Web3 discussions in the future. Today's headline is about Maduro and geopolitics. You see, is trading crypto easy for us? Besides keeping an eye on international finance, the US dollar trend, and what Trump says, we also have to pay attention to geopolitics. Maduro, maybe many of you aren't familiar with him, but if I mention the petro, the oil-backed cryptocurrency, you probably know what I'm talking about, right? Especially those who got burned by him and ended up in Guilin. Now, both Maduro and his wife have had actions taken against them by the US, which should be a bit satisfying for everyone, right? But if we look back now, what do we see? This petrocoin was almost the most outrageous state-level experiment in crypto history. Venezuela originally wanted to issue the coin to bypass US dollar sanctions, and by the way, rebuild national credit. In the end, the coin didn't save the country. Instead, its failure became a part of history.
The petro was the world's first cryptocurrency issued by a sovereign nation and claimed to be backed by physical resources. The government officially promised that each petro would correspond to a barrel of Venezuelan crude oil, but in practice, the technical framework was frequently changed. The transaction system was completely controlled by the government, liquidity dried up quickly, and the project failed rapidly.
Appreciate you being here, but we are going to run the country until such time as we can ensure a safe, proper, and judicious transition. The transition must be judicious, because that's what we're all about.
After the United States took over Venezuela, the issue of the ownership of shadow crypto assets left behind by the Maduro government became the central focus. According to estimates by investigative agencies, the scale of this secret asset system could be as high as $60 billion, with the source of funds tracing back to 2018. That year, Venezuela exported 70 tons of gold, and if a portion of that gold had been fully converted into Bitcoin at its low price and held for the long term, its current book value could have increased significantly.
To say that Venezuela's petro is the shortest-lived internet sensation might be a bit much. After all, it did last 6 years, right? But in those 6 years, not a single one of its grand promises came true. It didn't bypass US sanctions. It didn't stabilize the nearly worthless national currency. It didn't attract international investment. And it didn't improve the lives of ordinary people. In the end, even its creator, Maduro, got dragged down with it. So at the very least, this whole affair has served as a costly lesson for all those sovereign leaders who are thinking about launching their own national cryptocurrencies. Now, after Maduro's recent actions, things are about to get even more turbulent. Let's set Venezuela's petro aside for a moment. When it comes to national assets in the form of cryptocurrencies, who actually holds the private keys and who gets to call the shots? That's the real question we need to keep a close eye on when it comes to the major powers. Alright, a few days ago, we talked about how, at the very least, Korean exchanges shouldn't allow any single party to dominate in terms of shareholding, right? Now, there's a new development. Mirai Asset, a major and influential asset management company in Korea, has set its sights on the KOBIT exchange. Among Korean exchanges, KOBIT keeps a low profile, holding less than 1% of the market share. And precisely because it's not in the spotlight, I think that's why it's become the testing ground for Korea's traditional financial giants to dip their toes into the market. This way they won't be getting in too deep all at once, right? And it also won't attract too much attention. So judging from this move by Korean capital, I think the table might really be getting reshuffled for Korean exchanges.
Mirai Asset Group is one of Korea's leading comprehensive financial groups. As of mid-2025, its assets under management have exceeded $700 billion. Its founder, Park Soon-ju, is renowned for his long-term value investing style and is often referred to as the Warren Buffett of Korea by outsiders. KOBIT was founded in 2013 and was once one of the earliest Bitcoin exchanges in Korea. However, after the rise of Abit and Bithumb, it was quickly marginalized. By the end of 2025, its market share was less than 1%, while the two leading exchanges together controlled about 94% of the trading volume. Although KOBIT briefly turned a profit in 2024, its overall competitiveness remains weak.
Let's set aside KOBIT for now since its market share is small, and take a look at the two major exchanges in Korea. What is Upbeat busy with? It's busy with mergers, aiming for the United States stock market, planning to go public in the United States. Bitsum is doing the same, also paving the way for an initial public offering. So the leading players are all busy making moves into traditional finance. What does this tell us? It shows that there are still dividends here. Web3 looks at the traditional market and sees trading depth and huge capital pools, right? And traditional capital is looking at Web3. You have a wild land for development that is not regulated, where after reaping profits, you can even become an industry leader. This is a cognitive blind spot that attracts both sides. So only when traditional finance truly enters Web3 and Web3 truly enters the traditional world, will we realize that in fact we're all the same. After the market turbulence, why was Hunter 8 able to surge 134% against the trend? The crypto investment scene has recovered, but the capital is concentrated at the top. For early-stage startups, breaking through is probably going to be very difficult. Fortunately, during this transitional period, during the bear market, we still need to pay attention to mining. Last year, miners were toughing it out. Everyone knows that after the halving, the reward dropped from 6.25 to 3.125. Electricity costs have gone up, macro conditions have tightened, and miners' profits have been squeezed to the floor. On top of that, with Trump's repeated tariff policies, the entire mining machine supply chain has also started to become unstable. But China is home to the largest Bitcoin mining machine manufacturers, so once there's a problem in the supply chain, the cost of mining machines immediately soars. Now, when the entire industry is struggling to get by, there are still some people coming out like HKEX, and it's become a countdown. Its stock price has risen by more than 134% in a year, and now it's around $51. Currently, this company's loan limit at Coinbase has increased to 200 million US dollars, making it a top performer emerging against the odds.
This $200 million credit expansion officially took effect after HKEX submitted an amended filing to the US SEC, and the funds will be used for general corporate purposes. This move is not an isolated event, but rather a continuation of its overall strategic layout to branch into AI.
Let's bring these things together. We'll contribute our rigs into the entity in return for an 80% stake, and then we'll go build, scale, and grow this business together, not starting from scratch, but from an already scaled operation. So that's the plan. Today, American Bitcoin is a scaled mining operation from day one, and we're going to go and build the biggest company in the sector.
In December, HKEX signed a long-term agreement worth approximately $7 billion with the AI cloud platform FluidStug, committing to provide 245 megawatts of energy support to AI data centers over the next 15 years. At the same time, by acquiring a majority stake in American Bitcoin Company and expanding mining operations, the latter holding 5,098 bitcoins valued at about $458 million. This move provides significant asset support for modern expansion.
A has set an example for the B community, showing that if things aren't going well in the B sector, you can switch your computing power to AI. After all, as long as you have energy, it doesn't matter what you're mining. I hope mining companies shift computing power to AI, which would lower the total network hash rate for Bitcoin and Dogecoin. If the hash rate drops, miners' profits would increase. The AI bubble's size and burst time are unknown. Anyway, if the bubble bursts, it's easy enough to just switch back. As you all know, since 2024, venture capital in the crypto space has actually been performing very poorly. In the past, you could raise money with just a PowerPoint presentation, but that's not working anymore. There's still venture capital money in the crypto space, but the focus has shifted. It's now concentrated on leading projects and hot sectors. In other words, some are dying of thirst while others are drowning in excess. Let's look at some data. In 2024, there were 2,900 crypto VC deals, but by 2025, that number had shrunk to 1,200. So what this reflects is that the treasuries of crypto asset companies, DAOs, are the main driving force behind this concentration at the top. So here's the question: what are the VCs in the crypto space thinking? What about the institutions? How do they assess the risks to their capital?
We're believers in software, and if there's a major breakthrough in software that brings new applications, new models, or things like that, we'd definitely be interested, whether it's AI, crypto, or, what's happening in gaming.
Last year, DAT companies collectively saved $29 billion, offering institutional investors a more convenient way to allocate to cryptocurrencies than directly investing in startups. Although the scale of traditional venture capital has not decreased but actually increased from $13.8 billion in 2024 to $18.9 billion, the capital is highly concentrated. In a small number of deals, Dragonfly partner Rob Haddock pointed out that the amount of venture capital available for investment has decreased. Limited partners' willingness to invest has declined, coupled with clearer regulations. The preference for funding mature companies, along with the diversion of talent and attention to the AI sector, has further intensified the concentration of capital.
The other thing, though, is the kind of regulatory regime and what's possible, whether we can get clarity and so on.
VCs won't die out, and the hype won't disappear because where there's risk, there's high profit, right? So hot money will definitely come back gradually. But don't expect a frenzy or a round of explosive growth. That's a narrative from the past. The current overall market is still relatively calm. As for regulation, there's only one direction. We have to wait until the Genesis Act is officially implemented. Once the rules are clear, that will be a real lifeline for startups. So what is everyone scrambling for the most right now? Stablecoin payment institutions and their underlying infrastructure. And real-world assets, RWA, are also a direction favored by capital. Brohardik's assessment is also very pragmatic. He said that only after regulations become clear and when mergers, acquisitions, and IPOs increase will the industry gradually climb upward and hot money will flow back into companies that are genuinely focused on real business. All right, let's take a quick look.
Not long after the news of Maduro's arrest broke, Elon Musk posted a photo on X of himself having dinner with Trump, which was basically a public announcement that they've reconciled. Previously, there were rumors of tension between them, but this meal immediately brought the atmosphere back. According to Ethereum founder Vitalik, the mathematical problem that has troubled the blockchain industry for years is something Ethereum is now close to solving. It's down to the final line: security, decentralization, and scalability, the three key issues. In the past, you could only choose two, but now in real-world operation, all three are finally starting to hold up at the same time. It looks like the X account was most likely hacked. Suddenly, a bunch of suspicious posts appeared. At this point, there's only one safest course of action. Pretend you didn't see anything, don't click any links, don't touch any contract addresses, and wait for the official team to come out and clarify the situation. Now, when it comes to taking action, money is truly moving at lightning speed. According to data from Token Terminal, in the fourth quarter of last year, the stablecoin transfer volume on Ethereum surged past $8 trillion in one go, setting a new record. This shows that no matter how the market fluctuates, stablecoins have already become the busiest workhorses on the blockchain. Market sentiment isn't as panicked anymore. The Crypto Fear and Greed Index returned to 40 on Sunday, finally shifting from extreme fear to a more wait-and-see attitude. This is actually the first time since last October, indicating that investors' mindsets are slowly starting to recover.
All right, here's today's key takeaway. So listen up. What is the survival rule in the crypto world? Don't fall for the illusion of financial freedom. Don't chase after coins promising hundredfold returns, and don't discuss bottom fishing timing with people online. You think you're buying the dip? In reality, you're just handing your money over to the big players. You think you're accumulating coins. Actually, you're just helping the project team clear out their inventory. You think you're studying candlestick charts, but in fact, it's the charts that are studying the money in your pocket. When others talk about holding long-term, they might have already cashed out at the top in secret. When others say contracts are a sure win, they turn around and drag you into becoming the next sucker. Even the so-called positive announcements from exchanges, if you translate them, basically mean they're getting ready to cash out and want you to take over their bags. Remember the three golden rules of the crypto world. The market always takes off right after you sell at a loss. Bad news always hits right after you clear out your position. And friends only show up after you've made money. Want to survive longer? Listen to fewer stories, read more books, join fewer groups, and save more money. The key is to stay zen, keep your distance, and just watch the show. After all, staying alive in the crypto world is more important than anything else. If you get it, give a like. That's all for today's show. Here you'll find all our membership benefits to help you level up your understanding. Don't miss our Thursday members-only live stream. Let's grow together, slowly but surely. Hope you get rich. See you tomorrow.